Hey, everybody, welcome to today's episode of the What Worked For You show. Today, we're going to talk about something that we haven't talked about yet on this show, and that's options investing. Now, we hear options, stock market, like how does it all work? A lot of people say this is amazing. Other people say it's the riskiest thing ever, and everything in between, kind of like most investments. But our guest today, he is an expert in this space. He has spent a lot of time in the corporate world building this up. Today, he runs his own company as a coach. He's also a professor and helps people in this space. His school, Legacy Wealth Builder Academy, is great for this sort of thing. If you're interested in it, we'll talk about that as we get into the show. He is also a TEDx organizer, so he is no stranger to stages and what goes on to get high quality people to the stage and delivering wonderful content. So without further ado, Fadi Habib, how are you today?
I'm great. Happy to be here, Frank.
Wonderful. Let's dive in. You help busy professionals generate consistent income in short increments a day without getting into day trading chaos.
Correct.
What is it that finally clicked that made this approach work? And before you answer that, I think back to being a young IT professional. The year was 1999, and I still remember the young guy in the desk over, yeah, we're doing this options thing or trade. I don't know what he was doing, and anyway, it didn't work out. So tell us about that.
Okay, so I want to take everybody on a journey because I don't want to start with options.
Okay.
30 years ago, or more than that, I'm trying to make myself younger. When I graduated, I always had high-paying jobs. So I worked in the oil field, manufacturing, high tech. I used to work at BlackBerry. So all of my time, I had really high-paying jobs. However, I've never been wealthy. So that created a problem for me. I wanted to be wealthy, and I just didn't compute that my 9 to 5 will get me there. So I read this book called Cash Flow Quadrant, a must read for anybody who's interested about the subject. And it told me by Robert Kiyosaki, it told me that, you know what, being an employee is just one quadrant out of the four. But if you really want wealth, you need to go to the right side, which is business owner and investor. I didn't know anything about that because my father didn't know anything about that. He was just a doctor. So, we're very traditional family. Basically, you get grades, you go get a job, and that's it. You should not be doing anything more. And if you're doing anything more, that's considered very risky. So I knew that I want to be an investor. So what does an investor mean? It's mainly real estate or stocks. So I started with real estate. That was like 30, 35 years ago. And because if your father or your family are not very wealthy and they did not teach you the craft, you have to take the responsibility of taking that on yourself and you be happy with it. It's a nice burden to have. So I took a lot of courses, did a lot of mistakes, and I did very well in real estate. And then 15 years ago, I had this thought that anybody who invests in the stock market is a gambler, is an irresponsible person. And the reason I had this thought is because everybody around me was losing money. So it looked like it's a casino. So I was completely off. Like, I said, I'll never be putting my money in the stock market. But somebody invited me to this course, and I went mainly to prove the guy wrong, to just to reinforce what I know. But I was open-minded, and I discovered that there is actually a way. There's a method. The fact that everybody is using the stock market as a casino doesn't make it a casino. It's like if somebody is using the knife in a wrong way, this doesn't mean that the knife is not useful. The knife is useful. It's just that if you start cutting yourself, you will bleed. So again, took a lot of courses, did very well, started coaching people, and here I am right now, coaching people in how to do stocks and options. So that's kind of a quick summary.
So you were coaching people long before you started a business, it sounds like.
Yeah, of course. Yeah. So the business is very new. The business is about coaching people, but I went on my own like a year ago. But before that, I've been coaching people for about 8, 9 years. It's just that I did never had to market for myself. Like, people were just coming to me. But I took it seriously a year ago, basically developing my own program. Remember, I took a lot of courses and I coached a lot of people. So I know the shortcomings of every program I went to. Um, so I thought, like, what is like if I'm new right now, what is the best thing that I need? I need one, two, three, four. Okay, let's design a program around that, priced fairly, and the results I'm having is really good. It's just people are so happy.
Well, and there's a number of fascinating things here right off the bat in your story that a lot of people can relate to. One is you developed a tremendous, well, let me back up. Before I even say that, you said, I was working a number of high paying jobs and never getting wealthy.
Yeah.
So right off the bat, that's something we've heard many times, and it's amazing how people still buy into that, but it is, and so I love that.
But the
You
people
started,
are really a victim here because the whole education system is designed to pump people working, right? And if you're working, you're getting the worst deal. Like, if you read the cash flow quadrant, it tells that you get taxed even before you touch the money. You cannot write off anything. You're trading your time to make money for some people on the other quadrant, like the business owner, right? So you can't really get wealthy. Doesn't matter how much the salary has increased.
yeah, no, for sure. So you did that, you developed tremendous expertise. You were even teaching as a professor in universities, so you were regarded, highly regarded, having, in this skill set, you were even coaching people, helping people, and then you decided, okay, let's do the entrepreneur thing. Let's do it for me. And it's such a fascinating story because there's a lot of people, there's people listening to this today that I know they're experts at what they know. Like they're excellent at it, but they've never taken that step. So that's such an encouragement just right there.
It's not easy, but also I'm not that courageous because it also took me a lot of time. So,
Sure.
like my usual day 30 years ago was to go to 9 to 5. It was never 9 to 5 because all of my companies I worked with demanded much more time than the 40 hours. But anyway, let's say 9 to 5. And then after 5 p.m., I used to do my extracurricular, teaching myself about real estate, going to courses, dabbling and, and buying stuff. What really helps in the entrepreneurial journey is that you don't have to resign from your 9 to 5 to do this thing. You have to, like, you can start slow and build skills. Remember, you're gonna make mistakes. This is
Of
part of the
course.
so please don't just jump and resign and do this. Take your time, build expertise, allow yourself to fail one or two, three times while doing it, like basically as a side thing. And then when you're really sure, it took me like 30 years to be where I am right now, designing my life to be completely online. I can do whatever I'm doing in terms of coaching, teaching, anywhere. Like last year, I was in 2 months in Egypt, for example, and all of my coaching sessions and my trading has been going on beautifully because that's kind of the design point that I wanted. Um, I guess we need to talk about freedom. So, freedom for me, there's like 12 types of freedom. Freedom for me is time freedom, location freedom, and freedom of control. One of the really beautiful things that I see myself that I have achieved is not really that I'm having my business. It's the fact that I'm doing something that I really love. I tell people, even if the my coaching doesn't really get any revenue, I would still do it because, and I'm telling you the truth. I love it so much to the fact that I don't have awareness of the time when I'm in a coaching call. It can go for 3 hours and I'm totally happy.
Mhm. Yeah.
Um, it goes to this state of flow when you do something that you really love, which is really important when you're doing an entrepreneurial thing. Like Steve Jobs was talking about that, is that because it's too hard making a business like come out of the ground that you need to really love and buy into it and be emotionally connected to it because otherwise it's going to be too hard. So the fact that I love it so much is actually helping a bit or a lot.
Yeah. Yeah. Well, I'm glad you bring that up because one thing I've learned about people that really do well as entrepreneurs is that it's true. They have that burning passion there. Some call it burning desire, whatever the description is. to where, and I like the way you described it, you lose track of time. Like I coach investors on the real estate side, and that's happened to me where it's such a blessing
Yeah.
to help someone
Yeah.
that it does become easy to lose track of time. And they're like, well, oh my gosh, you gave me an extra 15 minutes. You didn't even notice
Hmm.
because you were so invested in other people's success. It's such a beautiful thing. So I love that you say that. So let's talk about that real quick. You know, you have a system called growth and you spell it out like an acronym where you're
Yeah.
talking about goal setting strategy, risk mitigation, and so forth. What's a big win, maybe the biggest win one of your students has had with the strategy so far?
So it's not get rich quick scheme. So whatever I'm going to tell you right now, please don't take it as such. So I have one person who he got like, he profited $21,000 in 3 weeks. But again, let's just me put this in perspective. It's not day trading. It is not get rich quick scheme. I always reset people to the target is about 24% ROI. And the reason I'm doing that is that there's so many people out there, Frank, um, that want to do day trading and want to double their money every 2, 3 months. Okay. I'm telling everybody, day trading is the biggest scam of all. Okay. It's a sure way for the masses to lose money very quickly. There's also a severe way of doing day trading called scalping, where they go in and out, not in a day, in a few seconds. I'm telling everybody the amount of people that come to me saying, I lost, like today I was talking to somebody who lost 50,000 in this stuff. You will see a lot of ads saying that you can double your money in a week or two, or a month or two, or a year or two. Listen to me, guys. It's a scam. I've seen no one who can consistently make money doing day trading, because you're gonna make money in a month, 2 or 3, and then you're gonna give it back month 4, all the profit plus your capital. There is a reason that you don't see any billionaire who's a day trader. Like you can see Warren Buffett, right? Who does 20% a year, by the way. So why do you think that if you have $20,000, you can generate income of $20,000 every month? There are people who are out there who has this mentality of, I only have $10 and I want to do $10 every month. Like, how will you do that? Like, and so there's so much myth around the stock market. Let me just say a few very quickly. Number one, a lot of people think it's a casino. They treat it as a casino. If you treat it as a casino, you will get a casino. And guess what? The house is always wins in a casino, right? People do not understand that they're buying businesses. You're not buying lottery tickets. You're buying a business. So if you're buying an Apple share, you're actually part holder, owner of Apple. How, like, you get, like, if you're buying real estate, any real estate investor, when they buy real estate, like say buy and hold, they will ask, what is the rent? What are the expenses? What is the cash flow? Is it making money or not? What is the potential for the area? They'll ask these questions. For some reason, even real estate investors, when they come to the stock market, they forget all of that. They will buy stuff, they will buy companies without looking at the balance sheet, without looking at the income statement. Like I ask people, like, are you sure that this company is making money? And they're not sure. I'm not sure why that the stock market elicits this behavior from everybody. It's maybe because everybody's using it, like nobody is getting trained on it. Stock market is not a casino. It's a place where you buy businesses. Look at it as real estate. You have to look at the company. Any company, any business is evaluated mainly on its ability to make money. If the company is not making money, it's not a good company. It's not investable for me, right? I will buy the products, but till it proves itself and makes money, it is, for me, it's not investable. So that's the first myth, is that it's a stock market, it's a casino, and I'm gonna buy something and hope it goes up. That's never a hope. You never buy real estate without checking the rents, right? Otherwise, you're gonna be a really irresponsible person. Another myth is that the stock market needs to go up all the time. So overall, in the last 100 years, it went up 10 to 11% compounded on average. However, the behavior of the stock market is that it breathes, it inhales, but it doesn't matter how much time I inhale. There is a time I have to exhale. Otherwise, I'm not going to be living. So it inhales and then exhales a little bit. And we know the statistics. Every 3, 4 years or 3, 4 units of time of exhaling, inhaling, meaning it goes up 3, 4 units of time, it's going to go down 1 unit of time. Okay, so like on average, 20 to 25% is going to go down, 75% is going to go up. So overall, it's going to go up by 10 to 11%, but it exhales, which means that when market corrects, when it goes down a little bit, it is totally normal. Every time you do that, the day traders and the news, it gives the impression that the world is crashing down. It's not. It's normal. Like for example, the last tariffs problem that we have, the market has been going up for 2 years. So whether it's a tariffs problem or another problem, the market was due to correct. I don't care what's the reason, but it goes down a little bit. Not a big deal. Like it's not. So understanding that the market corrects a little bit and there is nothing wrong with that is important. The other myth, which is very important as well, is that price and value has nothing to do with each other in the short term. What does this mean? Peter Lynch, who is a really, really good investor, said that there is absolutely no correlation between the value of a stock and the price of the stock in a short term, meaning that you can have a really good stock and the price of the stock is going down, 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 or a really bad stock or company and the price of the stock going up and down. Why is that? Because on the short term, the way I try to tell it to people is that in the short term, the market is a bunch of drunk teenagers in a party. It's really nothing logical. It's all about emotions. So explain to me why, because of COVID, Meta goes down. Meta is a good company making money during COVID. Why is the company going down? Why, if there is a war in Ukraine, that Apple stock goes down? It doesn't make any sense.
Yeah.
Because in the short term, it's based on emotions. It has nothing to do with the value of the company. Most people in the stock market do not know how to evaluate a company. They have no idea what is a good stock. Peter Lynch, and this statement makes people a lot of money, said that on the long term, there is 100% correlation. Remember, like 100% correlation between the value of the stock and the price. What does this mean? If we know that Meta is a good company, we know, by the way, short term in stocks is 2 years, long term is 5 years. We know that on the long term, the price will go up, regardless of what is happening in the short term. So if we know that Meta is a good company, meaning pumping a lot of profit, the growth rate of the EPS is going up, all of this good stuff, not have a lot of debt, we know in 5 years it's going to go up. The normal behavior of a person that is not trained in the stock market is that they will buy the stock when it's at the top, wait for it to go down, and then sell at the bottom. Just that's the normal behavior of people because they're not trained, because they have no idea. If you're buying something and you don't know if it's good or bad, if you're following the mentality of the market, the herd mentality, you will buy what everybody's buying, usually at the top. And you got to be very fearful at the bottom. Meta, for example, in 2022 went from $400 to $80. It's a catastrophe for anybody who does not understand. But if people understand in the short term, the price of the stock can go anywhere. And if you know that Meta is a really good stock, when it's at 80, while everybody else would be selling in panic, what you should do, if you know, only if you know that it's a good stock, people around me was trying, who knew what they were doing, they were trying to get money anywhere to buy stock, to buy the stock at 80 because it was dirt cheap. Of course, Meta right now is at 700. Why? Because it's a good stock. The revenue is humongous. The net earnings are humongous. The free cash flow is humongous. So it's another myth. Just to summarize, good stocks will go up on the long term. It's not a get-rich-quick scheme. Forget about day trading and scalping. If you want to do things consistently, profit consistently, you need to slow it down. Another myth is that you can disassociate risk and ROI. There are a couple. They're never separable. If somebody's telling you something has huge ROI, I don't care if you're oblivious to it or not, there is a huge risk attached to it.
Yep.
If you only look at risk, you're going to sell your house and buy lottery tickets. Sorry, if you only look at ROI, you're going to sell your house and buy lottery tickets because that's all what you see. Please, please understand. Every time you drive the car, there is a risk of an accident. Every time you see something with a high ROI, you got to ask yourself, I know there's a little bit risk that matches this ROI. What is the risk? Anyway, I need to stop talking. I can't stop.
Well, I'm glad you brought that up about risk because as long as I've been investing, and I'm sure it's probably been this way since the beginning of time and will be forever, as long as there's a market for selling some kind of method that's high ROI, low risk, people are going to jump on it.
Yeah, that's a scam, right? Like
Yeah.
so you can always balance the ROI and risk, but you can't say there's no risk. Okay, so let me retract the statement. Not a scam, but the risk always matches the ROI given. Okay, there's nothing called you're gonna get this high ROI, but really, really low risk. Like it goes together. You can't separate. So what is the balance of ROI risk that you'll be okay with? For me, that's 24%. Okay, because my method really like gets a grip on the risk. There's always risk, but a risk I'm okay with, and risk I can manage and control. And that's
And so,
why, by the way, the same method I'm using can get you 36, 48%. But I don't tell people that because I'm not okay with that. If you use it on stocks that are bad, it will give you more money. If you apply it to stocks that are risky, it will give you more money. But I don't do that. So risk and ROI is something that people need to understand that they go hand in hand and they are never separable.
and you're saying 24%, that's over a year, I assume.
Of course, of
Yeah.
course, of
So,
course.
and I mean, that's a great return. That's a great return.
That's double the
So,
market.
so then let me ask you this. Let's talk about options then for a moment. And that is, and not everyone, all our listeners know what options are. Tell us what they are and how you use them effectively and yet keep your risk to a
Okay,
minimum.
okay. So the word option means you have the right to do something or not do it because you have the option, right?
Mhm.
So if I agree with you, Frank, that I want to have the option of sometimes I get these business ideas and I want to call you at some point to sometimes I get this idea about a new business and I want to talk to somebody about it. So I'll come to you and say, listen, Frank, I want the option of calling you when I want in the next month. If I call you, it's going to be for 5 minutes. Are you okay to like, are you okay with this? That when I want, want to call you and talk to you about 5 minutes about new business ideas. And you say yes. That's what we just did is an options contract. I am the buyer of the option. I bought the option or the right to call you Frank, and there is a certain time period, which is the next month. So I bought an option, meaning, and the buyer of the option always has the right. I have the right to exercise my option at any point. And the option here is whenever I get an idea, I can call Frank anytime I want during the next month. Okay. You, Frank, are the seller of the option. You sold me the option of calling you. And when you're a seller of the option, you have the obligation to take my call when I get it. Okay. The good thing about this contract is that if I go with you in this contract, I will pay you $10. So it goes like this, Frank. In the next month, I want to be able to call you whenever I want to talk about the business ideas I have. And for that, if you agree to it, I'll give you $10 now. So in this example, I'm the buyer of the option. I'm going to pay $10. You're the seller of the option, and the seller always has the obligation, but he gets money. You got money. So, so this is just an example of what is an option. Let's just take this and go to the stock market to figure out how can we apply this. You okay with me going on?
No, go ahead. Yeah.
Okay. So let's say you, Frank, have 100 shares of, let's say, Apple, okay, or XYZ stock. You have 100 shares of XYZ stock, and you got this stock at $200. So you bought it at $200, but you are a person who does not know what is a good stock. You don't care, and you're so afraid if the stock goes down below 190. So you have it at 200. You're so afraid that it's going to go down below 190. You want to get traded at 190 max, okay? Because you don't understand what is a good stock. You don't know what is long-term investing. None of that. You just want to get rid of it at 190. And then you know that Fadi here really loves XYZ. I am Fadi. I love XYZ stock. I know it's a good business. has a huge net income, balance sheet is very strong, has a lot of free cash flow, very wide moat. Anyway, lot of good stuff about this stock. And I know that it's actually cheap. At 200, it's cheap because I know that its valuation is more than that. So Fadi, I want to buy it at 200 bucks. Okay? I'm okay to buy it at 200 bucks. You, Frank, are so afraid that the $100, 100 shares that you have, that you bought at 200 will go down to 190. So you come to me and say, Fadi, I know you buy XYZ. Can you agree to buy XYZ stock from me at 190 if it goes down to 190? So what you want is that if it goes down to 190, you want me to buy it from you. You want me to promise that I'm going to buy it from you at 190. From my point of view, I already wanted to buy it at 200. It would be even better for me if I buy it at 190, right?
Mm-hmm.
So basically in this example, you, Frank, are buying the option and I'm selling the option. I'm selling insurance, basically. I'm selling insurance because if the stock went down below 190, I will have to buy it. And you are happy because you bought the option of if the stock went down below 190, you will sell it to somebody else. And because you bought the option, you will pay me 10 bucks. Okay. So that's an income generation opportunity for me. I sold the option. It's as if I'm selling insurance. I insured the stock for you. And I know it's not that easy to comprehend. It's very difficult. It needs to marinate a little bit. But the idea here is you bought an option that if the price goes down below 190, somebody will have to buy it from you. I am the seller of the option. I'm very happy to do this option. Get income. I get the 10 bucks. Plus, I buy it at 190, which is a really good price for me. So anyway, in this example, I made something like 5% in a month because $10
So,
over 100 is about
so I like that you use the word insurance. So effectively, you're saying I'm going to pay a premium, for lack of a better word, a fee to protect my downside.
correct.
And in doing that, if the market goes in an unfavorable direction, I now have protection that I
Correct.
spent a little bit of extra money on.
Correct. But what I'm telling people not to do that, not to buy insurance, to sell insurance. Think of the insurance that you paid for the last 30 years or 40 years on your car insurance. How much money did the insurance company made on your behalf? You believe the insurance company is profitable? They're very profitable, right? How
Mm-hmm.
many times you
Oh, yeah.
actually claimed something? Very few times,
Yeah.
right? So in this example, I want to be the insurance company. But I'm a smart insurance company. I'm not going to insure every stock. I'm only going to insure good stocks. If I insure really crappy stocks, I will make more money, but it's a recipe for disaster. Same as an insurance company that um, basically they go and insure the houses in the hurricane belt in Florida. They're going to make a lot of money, but at some point of time, the hurricane will come and flatten everything and they will go bankrupt. So to follow what I'm doing here, it has to be on really good, solid stocks. So I start my program by explaining what is a good stock and how to choose a good stock. Because if I'm going to play insurance company, I'm going to be a smart insurance company. I'm not going to insure anybody or any company.
Got it. So is the profit in this in selling the insurance, as you were
Yes.
saying?
Yeah.
That's where
What I'm
people
saying
really
is
make
that,
their money?
yeah, so yes. And you do it by getting the premium. And the worst case scenario is that you will buy a stock at a discounted price. I remember I start the whole thing saying I want to buy XYZ at 200 because it's very priced. The worst case scenario here is that I'm going to collect the premium and buy a stock that is cheap. And because it's a good stock, I know it's going to go up in the long term. By the way, even while having the stock, while waiting for it to go up, we can do something called selling covered calls and collect some premium too. So it's basically you're collecting right, left, you're collecting when it goes up and collecting when it goes down. So that's the idea, but you do it only on good stocks. It's actually a very neat way of doing stuff. as long as you follow the risk mitigation things, as long as you make sure that you're not really overpowered by greed.
So
Okay, so you do
you're
it on good stocks.
so when you're doing this option investing, and I'm going to sell options, but I want to make sure first, if I'm understanding you correctly, that the stocks that we're doing these options with, these are good stocks. These are good
Correct.
companies. Like if a
Perfect.
company is very, what's the word I'm looking for? Like they're bullish, but it's very niche. Like it could be here today, gone tomorrow kind of thing. Like you could make money on it, but it's very high risk, not the one to put an option on. Is
No,
that basically
no.
it?
And I have specific criteria to figure out what is a good stock, but you nailed it. It has to be a good stock. It has to have 5, 6 years minimum of history of making profits. Because here's the thing, I don't care how sexy the company is. If it's not making money, it's not a good company. It's just simple. It's simple, right? So if the company, because it's a business, they might have the best products in the world, but if they did not figure out how to turn this to be profitable, it's not investable, right? Unless you want to donate the money to them, right? So it has to be not only 5, 6 years of positive earnings. I want the trend to be going better. I also want the future growth expectation of the earnings to be going up. So very, very like it has to be really solid in terms of they know what they're doing. I want the management to be really good and like managing the company properly. All of this stuff gives me like the peace to sleep at night that my money is not gonna be wasted. But you're right. Before you do options, it has to be in good stocks.
And so that takes us back to the idea of understanding what a good business looks like.
Correct.
So, and you mentioned it has to be profitable, but there's
Has
businesses out there that are profitable that maybe are not too good either. So you got to go deeper than that as well.
correct. And um, when I was studying Warren Buffett, do you know what was his age when he bought his first stock?
What's that?
11.
Wow.
He bought his first stock when he was 11. And one of the things that I did not know that shows why he's so successful is that the guy had 3, 4 businesses when he was that young. He was entrenched on understanding and running businesses. Like one business was, I think, video games. You know, these video games, arcade games. And he had some other businesses like so. He was entrenched on understanding businesses and running businesses when he was so young. So
Hmm.
it gave him the skill, like it gave him the skill of understanding what is a good business versus not a good business, right? Look
Right.
at the companies that he has. Apple, Coca-Cola, all the companies that have like basically succeeded in the test of time. They have really solid earnings. It's very hard to replace their income or take some uh, customers from them. They have a big moat. So and of course he also says that like one of his things that made him succeed is his good genes, meaning that he had a long life, and long life meaning he compounding is working a lot in his favor. Okay, so basically he told us you got to be patient because if you can't leave the money to compound, you're losing a lot. Compounding is really powerful when you leave company. So at 24%, whatever you leave is doubled every 3 years because this rule of 72 divided by 24 is 3. So you double your money every 3 years. You 10x your money in 10 years.
So as I'm thinking about this, you can hedge your bets. We got to learn what a good company looks like. We got to think long term. It's not a short term game, it's a long term game. So, as you were doing this, what's a belief about money or markets that you had to unlearn?
Hmm. So as I told you in the beginning, my first for years, the thought was it's a casino, it's gambling. Um, I got to
Okay.
be very irresponsible to put money in there. So that's kind of the belief that I went in. And then once I started educating myself, here's the problem though. The problem is that most people are using it as a get rich quick scheme, all the day trading ads, all of that. So that's
Mhm.
there. Most of the people, I believe, they're treating it as a casino. And then I have this voices like Warren Buffett. I have these courses that tells me that there is a method and it's logical. Like everything I told you, I hope it feels logical to you. There's nothing speculative about it. Like it makes sense that a good company, the company that is making profit, that the price will go up in a long term. It also so when I saw that it's logical, a bit by bit, I started moving. And also, I'm very risk averse. So one of the things that I advocate is that even with the people in my course, is that when you learn a new strategy, you have to start trading it or using it in something called a paper trading account. A paper
Mhm.
trading account is a free account whereby you open it. You don't have to put money at all. And it's a simulated trading account, meaning everything is real except the money. They give you $1 million monopoly money so that you try the strategy. And if you lose money, you don't lose your money. If you make money, you don't take it away. And you have to start with paper trading because you're going to make mistakes. Like one of my students told me before she came is that she lost $10,000 because she clicked on the wrong button. I don't have time for it. Like, there's you should not be playing around with something. Like you should start with paper trading, make all the mistakes, prove to yourself that you can make money in paper trading. Because if you don't make money in paper trading, why do you think you're going to make money in live trading, right? Like, if you're losing money in paper trading, it means that whoever taught you doesn't know what they're doing, or the strategy is not consistent, or not proven, or you're making mistakes. All of that needs to be fixed in paper trading, right? So for me, it has to be a zero risk environment before you graduate to go to live trading.
Yeah. No, that's a great point, and I think back to real estate. There's no shortage of information that people learn. They don't get the desired result. They learn something else. They don't get the desired result. And I think a lot of it is it's so easy today to put out information that maybe it works, but it may not work. And that's just it, right? Like, I mean, I once had a contractor come to a property to do work for us, and he was going to do X, Y, Z. And he said, by the way, I also do, A, B, C. I said, oh, well, how long have you been doing it? He's like, well, I just started. I was just watching some YouTube videos, and so I'm already, and so you just, right. And you're like, no, but it was just such a strong reminder of how easy it is to bring in information and then tomorrow proclaim yourself as an expert
Correct.
profitably. And so it's important to really understand that it's generally never worked that way. And the person that's susceptible to this is kind of leads into my next question. It's that person that only has 30 minutes a day. They only got a little time here, a little time there. Maybe it's every day in a week. Maybe it's 15 minutes, 30 minutes every other day. But they're looking for this high end result. But for whatever reason, they might legitimately only have a few minutes a day. How
Yeah,
should
I
that person approach somebody like yourself or some kind of strategy like this?
okay. So the reason I'm saying 15 minutes is that I'm trying to contrast it to day trading. In day trading, you need to look at the screen all day long. Otherwise, so when I say 15 minutes a day, it means that it's designed for busy professionals, meaning
Okay.
that you're not going to let this investing thing consume your whole day. You're busy, you have your business, you have your thing, or you're tired. But what I'm saying is that you can manage this very wisely only with 10, 15 minutes a day after you learn the thing. It does not need the amount of involvement like day trading because it's not day trading. Okay. So uh, people need to learn a lot, and YouTube is really good in giving a lot of learnings. However, What YouTube cannot give you is the feedback. So I always say you will never learn how to swim or how to ride horses or to scuba dive by watching YouTube videos. You need to go
Yeah.
into the pool to learn how to swim, right? Like at some point of time.
Sure.
So great value from YouTube in terms of information, but this is not enough for you to go and trade with your own money. So you need to have some the easiest way for me, that's my path that I used with real estate or stocks, is that you get courses, and better than courses, mentorship, because courses, it's kind of the same thing. They make you pay for a course, but there's no, how would you know if what you're doing is correct? How would you know? Like you need a coach with you in the swimming pool to tell you that. So um, learn as much as you can free, seek a coach, whether it's a friend or a mentorship program. Um, and please, it's never get rich quick. So please don't go like don't seek after the get rich quick schemes. Understand that you cannot disassociate risk from ROI. You can't. So if somebody is promising you gonna double your money for 6 months, please run, because
Yeah.
because chances are, because if there is a way, people would have been billionaires by now. Do you understand? Like right?
Sure.
If you can double your money for 6 months, like
Sure.
so, it's long term. It's investment. You're gonna get really good lucrative ROI. For me, 24%. But much more important than the ROI is how to protect your capital. I'm a risk averse person. We need to be responsible. For me, we cannot call it investment if in the quest of getting ROI, we're putting our capital at risk. That's gambling. As soon as you do that, it's gambling. Okay?
I hear you. So let me ask you two more things. One,
Yeah.
as you've gone through this journey in this world of options to the point where now you're coaching people full time, what's the biggest mistake you've made that has propelled you forward the most?
In the beginning, I made a lot of mistakes. So I think the biggest mistake is that when you have a lot of winnings or a lot of profit, you sometimes stupidly think you're invincible or you got it, right? So at some point of time, I was making so much money from that I thought, you know what? I'm gonna resign soon. And what I did not understand, I was so lucky. What I did not understand is that because of the ROI I'm getting, I'm also putting myself in a huge risk. I was lucky. I didn't really lose a lot of money. But that's the biggest mistake I think I got, is that because I was making so much money, I mistakenly thought that I'm the master of this. And I wasn't. I'm still not. But what I'm saying is being like naively extra confident or feeling invincible, or not, like every time you cross the street, you have to know that there are cars and there is a potential of an accident. And if you forget that for a second, the probability of an accident comes up. So I think that's the biggest mistake for me and that's why it makes me much more effective right now in my coaching, because I make sure I tell people where, like, part of my
Mm,
teaching is, if you learn a strategy, spend 1 hour learning a strategy, you need to spend 3 hours understanding how other people lost money in this,
mm,
right?
that's a good word there.
It's very, very important, because you're going to be the next person if you don't know if you don't protect
Yep.
yourself, right? Like when you cross the street, you need to know that the cars are coming usually this way so that you can look. Because if you don't know that, an accident might happen. So that's the biggest mistake.
So study what worked for an hour, then 3 hours for people
Uh,
that didn't work. That's a good word. And
yeah,
it's
how
true
other people,
because,
yeah,
man, that is
yeah.
so true. Love it. Love it. That is truth right there. So for people that want to, like, let's say someone maybe on a show wants to come see you, or they're interested in options trading, they're like, but I'm busy. I'm maybe I'm a full-time entrepreneur. I'm running a business, two businesses, or maybe they have a job. Maybe they're doing both, whatever. But they're interested in going into something like this as we'll call it a side hustle, for lack of a better term.
Yeah.
What can somebody expect? They're going to do the diligence. They're a business owner. They understand it's not get rich quick. But what's a reasonable expectation for someone that dives into this world?
So, okay. So, assuming they are trained properly, what they should expect is an ROI between 20 to 30%. That's doable, very doable. And they should expect, but it depends on who's teaching them, but they should expect that this 20 to 30% should not come with a lot of added risk that is unnecessary, right? Basically, for me, investment should happen while you can sleep very well at night. You don't care if the market went up or down tomorrow. You're not dying to look at the screen. Um,
Yeah.
there's no stop losses. All like it should be very relaxed. Like, have you ever seen Warren Buffett panicky? Never. I never saw him panicky.
Yeah.
So it's very calm,
Yeah.
really good ROI in a way that does not put your capital at a lot of risk. That's what you should be aiming for, right? And anything that does not jive with that, it like means that it's not ideal for me. Again, different styles, but I don't want to put my capital at risk. I don't want to be looking at screens all day. I do not want to have any speculative thing. I'm not hoping for the company to go up. I know if it has been running for 10 years with that much profit and the earnings are expected to increase going forward because they're opening more factories and stuff, I'm not like I don't see myself as in a lot of risk. I want it to be this way. Meanwhile, I have this options thing that makes me do income while I'm waiting. That's beautiful, right?
Love it. Love it. Well, and it speaks to this idea of you're not just investing, but you're treating it like a professional. It's not a casino, as you were saying. It's
Not a
not
casino.
gambling. We're being patient, we're being methodical, we're doing our research, and I love that you emphasize training. So, last question for you. You've mentioned many times get trained, the coaching, training, coaching, whatever you want to call it. How does somebody find the right person for them to learn this, how to do this?
Okay, so you have to be hearing their philosophy. Okay, so you go to YouTube, you go to the Facebook ads, and you follow two or three or four different whatever, like people who are teaching. And then you evaluate number one, if what they say makes sense in terms of a methodical way or is just hype. Okay. Because the people who do ads are very, very good at working on your emotion, right? On pressing on the pain points you have and trying to invoke the greed in you. Okay. So I want you to think of this. If somebody is making an ad about convincing you to buy lottery tickets, I know it's ridiculous. I guess so. So always evaluate if the person who is speaking is actually pitching you an investment way of doing stuff or a very great get rich quick theme. So there's a meter there. So you evaluate, that's number one. Number two, if the guy or girl is promising a lot of ROI that does not make sense, do you understand the risk? Is he talking about the risks or he's telling you there are no risks? You need to understand the risk. So there's a lot of things you need to, and usually everybody has this free um, events. So go listen to them, watch them, maybe talk to them, and then evaluate what makes sense to you, right? And I know it's not easy because there's so much noise in the market about people who are teaching stuff that is completely undoable in a consistent way. That's another thing. Do you want to do something that is as volatile as day trading, or you're here for the long term? Long term means you're not buying stock and waiting for 30 years. Long term means you really value the consistency, even with less ROI. For me, for example, if I go from here to Florida, it needs 24 hours. I want to go there as fast as possible. But what's more important than going there as fast as possible is actually reaching there. So the safety
Yeah.
will make me reduce my speed, meaning because I want to protect my capital, I will be okay with less ROI
Mhm.
so that I don't put my capital at risk.
Love it. Good stuff. Very fascinating. And it's, in a lot of ways, it's encouraging to think that, oh, yeah, you can do this stock market thing slowly, patiently, and reduce risk as an investor in the space. So that's encouraging to hear. So I appreciate you sharing. And for our listeners, I found this very fascinating. I hope you found it fascinating because I know a lot of
I
us, we think
I love
about, hey,
it.
it's like, hey, let's go invest in the stock market because we don't want to put all our eggs in one basket. So maybe we put a little bit of our capital there, maybe a lot, whatever it is. So if you want to learn more about options investing, speak with Fadi. We'll have his links below in the show notes. We'll have a link to his website where it talks about the program he teaches and so forth. And so I invite you to connect with him. So Fadi, I know you've got an appointment coming up, so I want to respect that. Thank you for taking the time to come on today. I really appreciate it. It was very educational. Can you leave us with a final word?
Yeah, especially for real estate investors, there is huge synergy in having these two ways of doing stuff. I'm a real estate investor too. So it's really good to have both ways of making money. And sometimes I took money from my options investing account, put it in real estate, and sometimes it's vice versa. Because it's good to have more than one engine. Like for me, the pillars to make money is stock market, real estate, and owning a business. So at some point of time, you need to be in the three. Don't do the three at the same time, but like phase it down and you need to be in the three. So it's not that it's a replacement to real estate, it's an add-on, and you need to be here, here, and here.
Love it. Love it. Well, I appreciate you sharing it. Thank you again for coming on today. I look forward to continuing the conversation.
Frank, thank you very much. I had a great time.